Okay, all right, I'm recording it now. So let me see if I can cast my screen to you. Share your screen. I think it's this screen here.
Yep, it loaded.
Okay, now, okay, so this is the RTH for today in like the light blue. Okay, do you see my mouse?
Yes, I see it.
Yeah, okay. And let me see if I can see my mouse. I think I can see it on the stream. The purple is the ETH. Okay. Oops. Sorry about that. Okay, so this is the ETH, and this is the RTH from today, and this is yesterday's RTH right here. Right now we're looking at an 8-tick Renko. And so something, let me see if I can find the image, if I took an image, and I'm pretty sure I did from yesterday. Okay, I got it right here. So these are the live spot gamma levels from yesterday. This isn't the same chart that we're looking at. This is a higher time frame chart. So this is a 20 tick Renko. Okay, so this goes back to like October 30th ish. So like what I've been finding is like when I start the day, what I want to do first thing is like, the first thing I want to do is I want to look at let me see if I can find it. And so you saw my Notion file, right? You said you reviewed like how I like look from the top down analysis and stuff. You saw something like this?
Yes, yes, this one I remember. Yeah.
Okay, so this isn't the same one, but this is something similar. And here's today's, and like the first thing that I start with is this, and this is something that we should all ask ourselves. Like one, like what's the date? It's kind of funny, but it's like actually makes a difference because it's Friday. Like, and what happens like on Friday sometimes, like market participants, and it's always easier in hindsight because like and not everything goes all the time. It always fluctuates. Like it doesn't just because I say like market participants might take money off the table or whatever, or like shorts might exit the market through the weekend. Like all this stuff is all just like vague sayings that are meant to be like have deeper insights than what we actually understand because there's options, hedging, there's all kinds of this stuff. So what does that actually mean? And so like, but it is something to consider. So it's Friday. I know I'm 100% sure like Tom said something like that. I don't watch the streams, but he always, you always look at the stuff in hindsight because the stream is like later in the day. And he mentions stuff like this all the time, but like what does it actually mean? So like we're gonna talk about the options dynamics here in a second. But the next thing I want to look at is after the date is like I want to look at like how am I doing? Like did I sleep okay? Did I get enough sleep? Did I get more than 7 hours of sleep? Did I arrive on time or did I arrive early? Or am I late? Am I sick? Like, how am I feeling today? Because if I'm uninspired, if I got less than 7 hours of sleep, or if I'm late, or if I'm sick, these are like flags. These are like caution signs for me to kind of like be careful, to take caution on the day, and to like minimize my risk a little bit. And and then the next thing that I ask myself is, the next thing you might want to ask yourself is, let's start with the higher time frame. Okay, let's look like top down analysis. So, and the top down analysis isn't too bad because it kind of comes from like your previous days. So uh, the levels don't change too much. If you did your levels on the higher time frame and the intermediate time frame on, like, let's say Monday, and you're still kind of keeping up with it and seeing how it interacted with your levels, they do change, but they don't change all that drastically. Now, this was a snapshot yesterday, and I don't have the time on this. Actually, I do right here. 10:30 a.m. Eastern. This is like almost an hour after. This was yesterday, almost an hour after the market opened. And what I'm trying to say is like the higher time frame, and we're talking about options levels here. So this is what I'm trying to point out. This is the options levels volatility trigger that Brent from Spot Gamma gives us, and in his these are like his options levels, and he notes like this options level, and this is an important level because it's what he calls the hedge wall. And usually if we're above the volatility trigger, the market usually goes into like tighter consolidative ranges, and like you have more opportunity or more consolidative. And you can actually kind of see it if you look right here. This is a 20 tick Renko, and you can see like right there, you see how like the market's just rotating and rotating and rotating and rotating, right? And so like it's a lot more consolidative when we're above that volatility trigger. Now this I think changed overnight. This I think it shifted up a little bit here, but it still didn't change the fact that oops. It still didn't change the fact that okay, here was Wednesday when we kind of started to like went into this. It was somewhat choppy, but then today, no, I'm sorry, Thursday. See, we gapped down in the overnight session.
Mm-hmm.
You see how this is the gray? This is gray here. This is the overnight session, the ETH. And in the ETH on Thursday, we gapped down. So oops. Here's yesterday's low, and we gapped down, and we opened, nope, not there, my bad. We opened right here-ish. So we gapped down, and not only we didn't just gap down, we gapped down below the volatility trigger. So this level is like provided by Spot Gamma's basic subscription, and you don't need like the alpha subscription. Like the alpha subscription has the Hero, Equity Hub, and all kinds of other like stuff, which just provides way too much like depth and complexity. And honestly, it's very contradictory. Like the Hero, if you saw my post from today, this is the post from today, like this purple line is Hero, and it just tanked. Like here's the initial like tick of at 9:30 of Hero. It's right here, and it broke below that, and it still like just kept tanking. And for it to drop 6 billion, that's a massive number, like massive number. And because it's billions, and the market didn't even retrace back. Oops, the market didn't even retrace back to the IB, the initial balance, which is right here. It still had a lot of room. Like the market wasn't even close to the initial balance range, the first hour's range. Didn't even come close. And the funny thing is about it is if the market did tank, if the market did go down, then you'll see Spot Gamma posting all over the place saying, hey man, look, like Hero dropped all this like crazy. You guys should have seen it coming, you know? But that's not the case. And it often isn't the case. Because if you look at yesterday's video, David, who is in Spot Gamma, he's a pretty big advocate for Spot Gamma as well. He posted something that we brought up in the video, and it showed the same exact thing, basically, where right here, where Hero's going up. But look at, I mean, how do you activate on that? Because it's moving up with price. right? So it's not really like a leading indicator or anything like that. Like it's Hero's not doing anything for you. You don't need it, like something to tell you that price is going up because you see it going up. And then
Yeah.
yeah, and then it's going down and it's going down with price. And then here, Bruce mentioned something right here in the latter half of the day after 11:30. It looks like I don't know what time frame that is. I think it's Eastern. But you see, Hero. This is calls. These are calls going into the market. So people are buying calls, and people are selling puts. So you anticipate the market to go up, but price, which is this white line, is not going up. It's just right. It just stays there. It hardly gets any rotations up. Like you can hardly get risk neutral off of these depending on your entry. I mean, if you're nailing the lows on each dip, then you could probably get risk neutral. But it's highly unlikely you're going to catch the lows when trying to get this. If you're trying to activate on a long, if you look up here where the market opened, look where the market closed.
Yeah.
Massive downtrend yesterday. A pretty big downtrend. Oops, sorry about that. Yeah, big move down yesterday, and Hero's just like pushing up, pushing up, pushing up, and it's just like that's the thing with like spot gamma that I wanted to like mention. Like, you really only need like the basic subscription because this is enough to kind of give you, me, like new traders an idea, like, and the new traders that you're talking to, that you have uh, an idea of what's going on, an auction narrative. And the auction narrative here is that on the higher time frame, we're gapped down below volatility trigger. Okay, and that's the first thing. So what do we anticipate if we gap down below the volatility trigger? Well, two things I think. One, we have high potential for volatility, and so you got to be careful. You got to be like you got to be aware, one, of your environment and the volatility. Like you might want to scale down risk. Maybe like if you use 3 lots normally, maybe go to 1 lot or maybe just go to 2 lot. Just kind of test the market a little bit, but don't overtrade. Test the market when you're and then you might need to widen for the fact of that you might need to widen your stops a bit. Um, so this was Thursday, and if we look this at the spot gamma reference, we might have high volatility for the day. It looked like it was neutral gamma because we had just gapped below the volatility trigger. So it's like neutral to negative gamma potentially. And I'm just guesstimating because I don't actually have the metrics, right? Let's just say if I had the basic subscription of spot gamma. Well, I do know for a fact though that we're below the volatility trigger. We're above the risk pivot level, which was 6,800. And I'll bring it up here. Do you see on the left side? These are the SPX options levels right here,
No.
and this says risk pivot. Do you see this one here?
Yes.
Okay, so this was the risk pivot, this was the risk pivot yesterday, and this is yesterday's auction right here. So the risk pivot really hasn't changed. It looks like so. We can see that the market came down. We gapped down. Now we might anticipate one of two things. The gap down kind of tells us like one what might we anticipate. We might anticipate responsive buying. We open low out of range. We open near overnight low. Now I have this because if we open near overnight low, it's possible that we might tag overnight low first sometimes. So you got to be cautious on that. And as a matter of fact, we did tag it in the session. So like here was the overnight low right here, and we tagged overnight low first, and then we went up,
Yeah.
slightly up, not really that much. But see, if we're anticipating responsive buying, and so first market opens here, pushes down, tags overnight low, pushes up, and then this was yesterday, pushes up and then fails down. See, if we're anticipating responsive buyers and we see order flow in this area that's telling us otherwise, then it's, if not, then what? So if we don't get into responsive buyers, then what? Then potential for the market to flush. And the market flushed, and it flushed down to where? It flushed down to the risk pivot level. Yeah, and this is like where and then like the trend line break accumulation kind of uh, presented itself really nicely here, and I think I activated it. Well, not really nicely. It was tough, man. It was a tough, kind of a tough day. It's been really choppy this week. Now, what I'm trying to say though is, this is where all those options came in yesterday, where you saw like just the hero spiking, just ripping to the upside right there where it's circled.
Mm-hmm.
That's where the hero, like, it was ripping to the upside, and it's really not telling you anything that price isn't telling you. But we know it's the risk pivot level, and a huge deal going on here, and it pushes up, but it only pushes up to the previous swing high of the open range of the opening range, and it misses previous low by 7 ticks. I don't know if you were here yesterday or not, but it misses previous low by a couple ticks. You might probably don't be able to see it, but it's right there where my see, and it misses it by a couple ticks, and then it just reverses, like just gets slammed, and then it breaks below this risk pivot level, and then tests it from below, and then sells off even more. And notice that this is also IB low. See, and this is like the thing that we were talking about when it comes to like quote unquote Tom's levels, like how does IB low and how does previous low like mesh with the higher time frame or the intermediate time frame? And that's the questions that we're kind of asking ourselves. And when we're looking at let's see if I can do this. When we're looking at the IB high, something that really helps me is putting on the crosshairs that show me, like when I have two charts, like the higher time frame chart with the options levels or another chart. Sorry if this looks a little messy here.
All good. Doing good.
Okay. The IB low. So see, like right here. This was a Thursday, and right there. This is like where the IB low was, but right there, that was the IB low, and it kind of aligns decently well with this like micro composite VHVN right here. This pink, this line. So there's a lot of confluence for this trade now, and this was the trend line break accumulation trade as well. So you see supply getting filled. Demand's getting filled, and then it gets this rip up right here. It gets that rip up on the intermediate time frame, and these anchored VWAPs. Like there's kind of a lot going on here for it to kind of go up, but it doesn't, and it fails over. And so like this is kind of like where the higher time frame levels, options levels, all kind of line up. And if like IB, the initial balance, kind of aligns somewhat with these, then that's cool. That's okay. But these come secondary to like these levels to me, like the options levels, like, and the micro composite levels and VHVNs. The IB is secondary to those. So like I'm comparing like with the IB, and then at the same time I'm not really looking at it as an IBF, because let me take a look at the time frame. This is actually right here is where it's up to the IB. So the IB is right here at this point. It's finally formed at this point.
Mm-hmm.
And when we break below it, the IB has been established already, and we test it from below, kind of, but we breach it somewhat higher. We actually go up and test SPX 6800 risk pivot level from below and then sell off. So the IB like level itself, pretty good level, but you probably would have got you. It's possible you might have got stopped depending on your stop. If you just shorted the IB as it stands, so like you kind of have to have your metrics. But you know, I think it was a good IB continuation short because of like all these confluences that we kind of saw that we just went over. The gap below volatility trigger, potential for a sell-off. And the second thing is the fact that this was a trendline break accumulation to the upside, and with a lot of confluence at this risk pivot level, and it didn't go any higher. It couldn't breathe. It couldn't close the gap. It missed it by 7 ticks, and it sold off and came all the way back down. That was like 20 plus points or something like that. And it breaks it. Like you have pretty good confluence for a short. I mean, unfortunately, I was trying to get short, but I did not get a trendline break accumulation to the short side. So you did, but it was up here, and I was in the long already. So I saw the short. I saw the short, but I was already in the long, and I didn't move my stop. Uh, that's kind of beside the point. I wanted to kind of emphasize how awesome, how kind of like awesome, helpful. I don't know what the word is, but the volatility trigger kind of was um, that day because we opened below that volatility trigger here on Thursday, and it kind of helps you understand like two things we might anticipate. You know, like if one we might see responsive buying. If we don't get responsive buying, then it's possible we flush, especially because of the fact that we're below volatility trigger. And if we're below that volatility trigger, caution, you might not want to fade it, especially if we breach that risk off level, the this risk pivot level here, and we breached it. And if you're fading it, which I was fading it, you know, somewhat foolishly, you can get kind of ran over, and that's kind of like what happened. And so that's kind of like hopefully helps you a little bit. Like, you know, at this point, you know, the IB is kind of helpful. Like the initial balance on that day was kind of helpful, right? But it's in respect to how they align with the options levels and like the higher time frame or intermediate VHVN levels and like high volume nodes like on the intermediate time frame, like these things here.
Yeah.
Like this is the overall volume profile for multiple days back. So you know, and the narration is carried from one day to the next. So like if you look on Friday from last week, based on what happened on the higher time frame, I was anticipating the higher time frame to be like balance. I know I can change it here, so there's no proof that I actually like. Oh, I might have posted it, but you know it was already past that date. But my point is that I'm anticipating like on the higher time frame, I anticipate it to be mixed, like balanced, but it's still somewhat in an uptrend, but it's really wide. It's really wide, like
Is it a wide range? Two.
huge for both down, obviously down and up. I wasn't anticipating to come like this.
Mm-hmm.
See, this is Monday of this week, and this is Monday of last week, and so the reason I was anticipating it to go into like a chop, and this was like, let me take a look here, put back on the drawings, and this is a fib. So this was a strong move down, right? This was over like 2 weeks. Like this was the end of October here, October 28th, and then here was like Halloween, October 30th, or I'm sorry, and then there's October 31st, and then here's Monday, and then the market starts like breaks out of this consolidation up here, and then breaks below like the volatility trigger, And the risk pivot level, I don't have like the, I could probably pull up a screenshot of that time, but I'm pretty sure that the volatility trigger would have been like somewhere around here, and then we breach it. But the market was already kind of looking weak prior to that. Like you can kind of see it. And if I go back in my notes, you can see you can actually see it right here. Do you see like this yellow line and it's shifting down? This is the VHVN, so it shifts up, and then 31st Halloween it shifts down, and like the market's having a hard time pushing up, goes makes a lower low, hard time pushing up, and it kind of breached this higher high or whatever, but it still had a hard time. And then let's go to the Friday the 31st. Well, we make a lower low, so we're basically going down now. And not only that, but the VHVN is shifting down on the intermediate time frame, telling me that market's accepting lower prices at this point. And caution, I mean, you don't really know. And the thing is if we're in positive gamma territory, this thing could go up. And the fact is it didn't go. It didn't go up, but it could go up. And so, like, if it gets slammed, like it did Friday, and then we notice here in the ETH on Sunday, and then Monday, it kind of sits in this chop. But see, the VHVN shifted down again right here on Monday. And then in the overnight session of Monday into Tuesday, we gap down. We just get this flush down, likely below the volatility trigger. I'm not 100% sure, but I'd have to I could double check. And we open in a gap down, and what do we anticipate? Potential for responsive buying. And if you don't get that responsive buying, then what? And see, like, we did open, and I can pull up the, and we do get that, we do anticipate the responsive buying. And then you get a, let me see, what day was it? Not there. This is an 8-tick Renko. That was the 30. That was like the first or something, right? Are yeah. Oh no, it's all good. Are you following though? Like, this is kind of like how I'm narrating. Um, this is kind of how I'm narrating. So in that upper distribution from last week, which was like October 31st, that I was showing you the higher time frame chart. Now we're zooming in a little bit on the 8-tick Renko. Okay, and the market closed here on the higher on Wednesday, and here's Thursday, and this is when the VHVN on the higher time frame started shifting down, if you remember that. Then it shifted down again on the Friday, and then on the Monday, we get this like kind of chop balance type day, and then I think it shifted down actually right here, and then we get this gap down, and then when we got that gap down, potentially below that risk pivot level or the volatility trigger, we might anticipate responsive buying, and if not, then what? So if in the market it appears that it like kind of chopped and then pushed down, but it looks like it the responsive buying came in later. Like this is kind of like how I'm narrating, but that higher time frame look with this VHVN shifting down in the intermediate time frame really kind of gave some helpful hints to like what's going on in the intermediate time frame. And like it's hard to see it, but buyers are kind of like exhausting here, even though the market's getting these like strong moves back into range, like mean reverting back up into range, like in this uppercut, like it's getting these moves back up, and then we like closed here this one day, but we moved back up, and we get this move back down, and we close low again the next day, but then we get this open back up over in the overnight session, So it like looks like it's trying to, it's like goes down and bobs back up, goes down and bobs back up. And that's kind of like what happens in the positive gamma environment.
Uh-huh.
And then, and so like that's hopefully that kind of like gives you an idea of like how I'm looking at it.
Yeah, I mean, if you don't mind, like, let me just reiterate, like, just say it back to you, like,
Hmm.
so the gist of it, what I'm understanding is when price is above the gamma, so when price is in positive gamma, it's more so to be less volatile, so the consolidation is expected. And as the days are developing, watching those levels will give you contextual clues on what to expect on the day. And at least for me personally, I've never used option levels when trading, but I could see how using these, looking at the gaps, and also bringing in the option levels to see the volatility could make a difference on the decisions I will make for sure. But I can't really say I completely understand it though. I am very new to options level, so
Yeah, yeah. Take a look. Excuse me. Um, yeah, yeah. I mean, is not much to it like than that. Let me try to think of. There's like you see like L2. These are the options levels here on the left side, and the way that they work is see this is volatility trigger. It says 6780. That's X. That's SPX price. Uh,
mhm.
but when you translate the SPX price to ES, there's a price difference, and that you, you don't really have to understand this to understand like what I'm talking about here. But see, like here's the XPX price on the volatility trigger 6780, and there's a translation from SPX to ES. There's an increase of like, and this changes almost pretty much every day. This is like the
Okay.
spread difference from SPX to ES. So you have to like actively manage this change of price from the SPX to the ES. Anyways, this 6780 gets translated into ES price 6800. And oops. Now, like I was saying, you don't really need to like know that to kind of like understand that. If you were to see it on this chart here, for instance,
Mhm.
let me zoom in. This is our higher time frame, 20 tick Renko. Uh, Here's the volatility trigger right here. You can kind of see it right there, right?
Yep.
Well, and this is today right here, and we open well below it. We actually open well below the put wall, which is SPX 6700. Um, Now, this it's I don't really know how to like. You can anticipate one that there's going to be high volatility and that you can minimize your risk. Like that's the first thing if you were opening below the volatility trigger. Next is like the zero gamma level, which is like a somewhat important level as well that can be tested, respected or rejected. It's like a good target. And if this target, if this base, okay, here's I think a good answer to your question. If and when these levels align with my intermediate time frame chart, which is this chart right here, if these levels align with like these VHVNs,
Mhm.
and if they align with previous days levels, like previous days high or previous days low, like it helps me build a narrative. And I have videos of like me doing a narrative. Um, and then from that narrative, it gives me price targets for the day. So And that's if the options levels align with my intermediate levels and my intraday levels. Uh, like like this. So here's the SPX levels on the left, the options levels.
Okay.
And this was Wednesday the 12th. And volatility triggers down here and risk pivot levels down here. This is SPX 6800. So the risk pivot level still hasn't changed even from this day, it looks like to me. And so based and I draw like important levels based off of yesterday's RTH. So here's yesterday's RTH right here, and do like these do these like gamma levels kind of align? Like, do they help with like confluence on these levels? This actually isn't a great day because these levels were actually generated from I think the previous day, which is see like, and it's like what I said before. If once you do it, once you generate these levels don't really change too much from day to day. So I kept those same levels from the previous day and kind of carried them over. But you know, in the morning, you narrate like what happened the previous day, and you see like your new levels and where we're opening. Are we opening below the vol trigger, above it? What might we anticipate? And it helps establish the narrative for like a maybe possible mean reversion or possible extension. And it gives you price targets. Like if we open below the volatility trigger, then we might anticipate extension. Like we might anticipate high volatility and an extended move. If we don't push back above it, then what? If we don't push back above the volatility trigger, this isn't the example, but then what? Then it's possible we might fail. And what are our price targets on the bottom side, on the bottom, on the lower, on the downside? And then once you establish like the locations that you want to enter, well, it at least gives you a zone. So if you see here, I have a zone here from uh, 68.36 to 68.31 ish. So you know that you have about 5 points of risk. And let's say if I entered here and I put my stop on the outside of that zone, then I have, and I'm targeting what? What's my target? And let's say I have 3 lots, okay? And I'm targeting, and I want to get long because I'm anticipating mean reversion because we're above the risk pivot and we're above the volatility trigger. I want to get long. And this is a pullback to yesterday's mid. This is like a pullback to yesterday's middle area where this consolidation range was on this day. This was the 11th of November. Market pulls back down to this area where we blasted through yesterday. And this is my zone that I want to interact in. And if I execute, I know that I might have like 6 points of risk. And, you know, it could go lower. And depending on the price and how it responds to this area, you know, it impulsed up and then it pulled back. Like this, if I entered here, like that would have been pretty good, you know, like for an entry. Although I entered here and I actually got stopped and then it moved up. Like, and that's just the nature of the market.
Yeah.
Like if you entered and you just kept your stop outside of this area, you would have been clean. You would have been fine. Um, but that's just the nature of the market. So like, but at least this kind of gives you an idea, and like you don't have to be scared. Like you don't have to move your stop or anything like that. Like, and if I were wise and I got risk neutral, I could have just moved my stop down here or whatever, you know. And then if the market comes all the way back, then I made nothing on the trade, which is a part of trading as well. So it's like up to you how you want to trade. But these levels, these options levels, kind of help establish like some narrative. And these aren't really like a great example, but does that kind of help clarify what you're asking?
Yeah, like the biggest thing I find based on what you're telling me right now is with options, people are actually interacting with it. It's not just an arbitrary number. It's something that it's somewhat more concrete because people are literally putting these positions into the market. Unlike, let's say, the overnight low or the initial balance low, where is just a level. There's no real incentive for people to react to that level, unlike the options. So having the confluence with the options and with these other technical levels, I could see how it could be a very strong way to build a concept, like a narrative for the day.
Hmm. Yeah, and it's pretty helpful. And if you stay active with it, like if you're able to get it, like, and I'm slow, man. Like I'm a slow type of guy, and I have a hard time like shifting my mind sometimes. But if you see, like, for instance, here's the put wall. Um, on the You see it right here on the left. It says put wall,
Yeah.
and this aligns well with this low volume node as well. And and you can see here when the market pushed up, it pushed up above this microcomposite VPOC area here, and it started to like reclaim these options levels. And you see this bulk of levels right here, like it's just like a bulk of levels, like, and the market's starting to accept it, and it's having a hard time going down. And we have this low volume node. And what does this also, and on top of that, what does this also look like in regards to the ETH as well? Um,
Yeah.
like you have this low volume node, and what happens with low volume nodes oftentimes is it could either hold as resistance, which it kind of did, but it can also get swept, and um, and that's what kind of happened here. And this is on a micro composite time frame here. It's kind of hard because this was more of like a gap out of range type of day. But if you were looking long, okay, so I actually have an example from today, and I recorded it. I actually have a pretty, I was frustrated with the day, and I had took some losses in the end of the day. Um, so I kind of got frustrated at the end of the day, so I stopped. But my see down here, I took. Now this is kind of like where it gets messy, but you draw your drawings based on. See, then I start to draw my drawings based on like all these different, based on the higher time frame, and based on like my market profile time frame as well, which is, I don't know if you use like TPO charts or not.
Yeah, I do use them, but I only look at the RTH with the TPOs.
Oh, okay, yeah, I have both. So this is ETH and RTH. So like based off of all these, I kind of stack them. Oops, let me get that call real quick. Hold on.
Yeah, no worries.
Okay, but this gives me an idea here. So this is like, and at this point, I'm combining multiple profiles. Uh, here's here's zero gamma right here, and I was aiming for this. This was my target. This zero gamma level aligned with overnight high, and and so I was trying to get long in this area here where this green line is at. And this green line here aligns with these gamma levels here and this ledge on the higher time frame. Do you see this blue volume profile on the right?
Yeah.
This volume profile on the right is the microcomposite again, and this level aligns with this ledge. So what's happening is I'm leaning on this volume right here to support a long trade up into zero gamma. And this kind of gives you your risk reward if you were to look at it that way. And now if you look at this chart, it's looking like a shit show, right? Because there's so much stuff going on because you're layering one thing on top of another. Um, Now it just looks like like what's that?
I was about to say, as long as it's understood what these levels are, it'll be much more clear to that. I'm sure it may look like some crazy to me, but I'm sure to you, it's much more understandable. So
Yeah, these rectangles I basically draw on one chart and it translates it or copies it onto this chart. So if I'm drawing it onto onto on one and then it copies it onto another. But like
yeah,
my target, I want to see how, and I want to front run these levels. So I want to front run overnight high and I want to front run zero gamma because these align so closely. I want to kind of front run that a little bit to make sure I kind of get filled. And I oftentimes don't. I oftentimes get like reverse, like strong reversals. And actually, you can see it right there. The market right here had this strong reversal, front running zero gamma, front running overnight high. So you want to like front run these levels kind of.
yeah,
And this is why I find help. This is why I find how I find them helpful.
hmm,
Um, because if once you start to establish like a narrative and you know you're leaning on volume and you get this strong impulse up and you get this reclaim of the put wall's right here and the market's reclaiming this put wall. We were overextended on the downside, and if we're below that put wall, we might get a potential for a move back up. There's no way to know that, but with this impulse back up, and you saw the PA, if you see it in the PA, like in Bookmap, you can start to at that point realize that this is starting to get reclaimed and build a long thesis at that point if you already haven't. And you see it, and then
yeah.
yeah.
Go on, sorry.
No, no, that's it, and that's pretty much all I gotta say.
Yeah. Okay. Well, I was about to say like the consolidation range you mentioned, it was also above the RTH open as well. So
Right
it
here.
may be something else. Yeah, yeah, I believe yeah, it should be somewhere around there. Like I
Mm.
remember specifically at that moment, like it was very very close to the open, so I didn't take the trade, but there was a trend line break trade right there as well from that swing down on up.
Oh,
The
like
overnight low,
yeah. Mm-hmm.
yeah, the overnight low was there, the liquidities filled and all that, and price just gapped right up above the level, started consolidating, and then carried on higher. So
Yeah, right there.
it's something I noticed without the option stuff. That's something I want to learn more about this options for sure. It's again like there are actual people willing to do actual transactions there. It's not just arbitrary levels. I wouldn't call it arbitrary, but it's it's
Yeah.
more concrete than like the overnight high, overnight low. I never know what could happen there, but here I know for a fact people want to do something at the very least,
And
which
the
is very powerful. I can see that.
and the last thing is like these levels come to alignment with the current auction narrative. The options levels come after the actual real pricing. So you see like the auction is like the micro composites. It's the previous
Mm-hmm.
day and it's the overnight. And then what happens is then the options come in. Then the options come in and establish these levels. And they kind of only establish it based on previous levels. So when people are like, "Oh, this is the options level," and when this happens and this happens, well, that those levels come from the auction narrative first. If so, when they'll often align with the auction. And so when they do align with the auction, it helps give further support to your auction narrative on the micro composite and on the intermediate composite. So that's yeah. And then these come in and it's like, "Oh, you know what? It looks like they verified like kind of like my thesis a little bit." So it really helps with that.
Yeah.
Uh,
Okay, good to know. Like the way I've done my higher time frame